Barry Silbert makes markets in just about every kind of security. He is the CEO and founder of Second Market. This is an online marketplace connecting buyers and sellers of illiquid assets. Shares in private companies such as Facebook trade on this market while remaining private. Barry with us now in the newsroom. Thanks so much for coming in, Barry. Nice to meet you. Now, according to one consultancy firm doing a little bit of research, $10 billion is the amount of transactions that you guys processed last year, again, in illiquid assets. Does that number sound about right?
It's about right. It's actually about 4 times what we did the year before, which was probably 4 times what we did the year before that. It's growing really fast.
So structured products, bankruptcy claims, private tech companies, these are just a few of the categories. Are the private tech companies, such as Twitter, such as Facebook, is this still the biggest part of your business?
Well, so you mentioned all these different alternative investments that we trade in. So the idea is to create a platform for trading all types of investments like this. And so over the past couple of years, the private company marketplace really has exploded to be the fastest growing market. Last year, about $400 million of private company stock traded on Second Market.
Speaking of which, I want to sort of stay with Facebook because it's a great example of one of the challenges that I imagine that's coming up for you. I mean, the SEC is concerned about this 500 share rule, which means basically if you're a company, whether you're public or private, I mean, you cannot be selling more than 500 shares to an individual shareholder. If the SEC clamps down on this, that would affect Facebook. And this kind of transaction is where you're making a lot of your money. What would that do?
What's very unique about the Second Market model is we actually work with the company. So companies essentially opt in to create a marketplace on Second Market. And what we actually see happening is a way for companies to actually consolidate the shareholder base. So they do want to stay below 500. If they go above 500, they have to register to become a publicly traded company. But what we have seen in the past is companies reducing their shareholder counts by sometimes 10, 20, 30%.
The SEC has also voiced concerns about transparency, about the illiquid nature also, obviously, of the transactions. To what extent are you dealing with that? To what extent do you think this is a threat to your business model?
Well, so I guess to be clear, we're regulated. So we're a registered broker-dealer, FINRA. We're an ATS, regulated by the SEC. And we think transparency is important. We think independence is important. And so by working with the companies, we actually enable them to provide information to buyers and sellers through the Second Market platform to level the playing field.
All right. Well, speaking of leveling the playing field, you also have competitors, right? I mean, there's some nipping at your heels. Expert Systems, Shares, Post. What are you doing to stay ahead of them?
I think it's important to understand the differences between Second Market and these other platforms. One is we've been around for 5, 6 years. You mentioned 10,
which is old now in this kind of market.
It's old. I don't know if we're still a startup, but so $10 billion last year in transactions completed. I don't know what those other folks have done. We are regulated as opposed to what other folks are doing out there, and our model is very unique in the private company space. It's very important for people to understand that it's now taking companies so much longer to go public. They don't want to go public oftentimes anymore, and so they're viewing Second Market as a spring training. So they're viewing us as a place where they can take out some early shareholders, bring in some new investors on the way to growing to the point where they actually can go public, which is now, a profitable company, $1 billion type market cap.
Well, speaking of going public, I mean, one of the biggest markets, in other words, some of your biggest clients are people who work for Facebook, for example, right? They want to sort of buy shares almost in the company that is not yet public. To what extent do you think that buyers are almost just forced to guess at value?
Because,
I know this isn't your problem, but I'm just curious.
Well, we think transparency into pricing and information is very, very important. And so when we work with the company essentially sets all the rules around their market. So it's not like a NASDAQ market where it's 9:30 to 4. A company will decide who the buyers are, who the sellers are. When the market's open, is it a once-a-year auction or is it a 1-week-a-year liquidity window? And the companies also decide how much information they want to share. And since it's all being done in this closed environment, they're willing to share more information, which is good for buyers and sellers.
All right, willing to share more information, but how much do you think there is mispricing, miscalculation potential in any transaction?
The buyers on Second Market are sophisticated investors. They're institutional investors typically. They are using all available information, both what they gather publicly as well as from the company to make investment decisions. This is the fair market price. Now, it may not be as liquid as a public market, but this is the best price that's being set out there.
So you think, in essence, all securities that trade on Second Market, the true price is being represented?
It's an arm's length transaction between a willing buyer and a willing seller, so I think so.
Barry, thanks so much for coming in, talking to us about Second Market. Barry Silbert, CEO and founder of Second Market.